Real estate test question compilation video. I made this video to make it easier for you when you are studying for your real estate exam. These 50 test questions are already in a playlist, but I decided to combine them into one video. So you don't have to keep clicking through 5 different videos. Keep in mind, there will be 5 sections with different topics, and in each section, you're going to have the questions numbered 1 through 10. I'm experimenting and trying this different format to see if it's actually better for you when you're studying. So if you could do me a huge favor and drop a comment if you like the 50 question video or the 10 question video when studying, it would be super helpful for me to make better content for you. Okay, let's start with the first section. All right, question number 1. Which figure represents the amount of income available as a return to an investor? A. Net operating income. B. Potential gross income. C. Adjusted gross spendable income. D. Effective gross income. The answer is A. Net operating income. And so the net operating income of an investment property is calculated by subtracting the operating expenses from the effective gross income. And so once again, net operating income, you're going to calculate this by taking the gross income and subtracting the operating expenses from it. Question number 2. Which of these lenders would be most likely to finance a large shopping mall? A. A commercial bank. B. A seller. C. Savings and loan association. D. Life insurance company. The answer is D, a life insurance company. And that's kind of a surprising answer. But let me walk you through it. Typically, savings banks only deal in single-family residence loans, while commercial banks, they typically specialize in interim financing. While a life insurance company is likely to invest in large commercial projects such as shopping malls, and typically sellers will finance land and maybe special purpose projects when money's tight. So answer D, life insurance company. Question number 3. Which statement is not true about a real estate investment trust, also known as a REIT, R-E-I-T? A, sells ownership shares. B, receives special tax considerations. C, offers high yields to customers. D, easy to qualify for. The answer is D, easy to qualify for. REITs, they do sell ownership shares, they do receive special tax considerations, and they often offer high yields to investors. So that leaves answer D, easy to qualify for, as the not true about a real estate investment trust. Question number 4. What is the foremost reason people invest in properties? A, to save on taxes. B, to make money. C, to plan for retirement. D, to have a second home to enjoy. Wow, all of the answers here sound great. But unfortunately, we can only pick one answer. And the answer is B, to make money. So people do choose to invest in property to reduce taxes, to create some sort of estate for their family. They also buy properties to enjoy for personal reasons, right? You can have a second home, maybe at a lake, maybe at the beach, maybe in the mountains. But the number one reason why people invest in property is to make money. Question number 5. Which of the following is not a possible benefit of investing in real property? A, tax shelter. B, liquidity. C, income. D, stability. Answer B, liquidity. So investors might buy real estate to supplement their income, reduce their taxes, or simply enjoy the property. But investment properties are not usually very liquid, and it could take a couple months to actually sell your property and turn it into cash. What's important about this question is that you understand what each of the answers mean, right? So like tax shelter, that's a place to save on taxes. B, liquidity means you actually have liquid funds, cash or some sort of currency that you can quickly transact in. C, income obviously is just income, right? Make sure you understand what each of these answers mean, and that will help you answer the questions more effectively. Okay, so we are halfway through the questions to help you pass your real estate exam. If you like these questions, I've partnered with Calibri Real Estate. I used them. They're an online website that offers discounted test questions. In the description, I have a link, or you can just continue to watch the videos and study with me. A lot of people have passed just using that method, but maybe you're in a time crunch. Maybe you just want access to all the questions yourself. Go ahead and check the link in my description. All right, moving on. Question number 6. An association of 2 or more people who combine financial resources to achieve investment objectives is A, not allowed in California. B, a syndicate. C, made up of wealthy individuals. D, a group of brokers. The answer is B, a syndicate. So when 2 or more people combine their financial resources to achieve certain investment objectives and can acquire real estate that a single individual cannot do alone or purchase alone, that's what's considered a syndicate. This question, you just got to basically know the definition of a syndicate. Question number 7. Which lender typically deals in interim financing? A, a commercial bank. B, life insurance company. C, a syndicate. D, a real estate trust. The answer is A, commercial bank. Commercial banks specialize in interim financing. We had an earlier question that talked about life insurance companies, and they actually like to invest in large commercial projects like shopping malls or retail centers. We also just had a question about syndicates, and a syndicate is just 2 or more people pooling their resources together to buy a real estate investment. So for question 7, if you know the definition of each of these answers, this is going to be an easy one for you. Question number 8. Examining the economic soundness of a property means looking at all of the following except which? A, zoning issues. B, community growth trends. C, refinancing. D, income projections of the property. The answer is C, refinancing. So if we look at what the question is really asking, it's asking what would an investor look at regarding the economic soundness of a property? So they're going to be taking a look at the zoning, the community growth trends, and they're going to be looking at the income of the property in the area. Refinancing has nothing to do with the economic soundness of a property. Question number 9. Which of the following is a possible benefit of investing in real property? A, capital outlay. B, financing. C, appreciation. And D, property management. The answer is C, appreciation. So if we think about the possible benefits of investing in real estate as a whole, right? We look at real estate investing. You could potentially have tax shelters and other tax benefits. You could have appreciation. Investing in real estate is typically a hedge against inflation. Investing in real estate typically generates income if you're doing it correctly. And then on the other side of it, you're actually looking at the risk of investing in real estate, right? The first one is capital outlay. Another risk is financing and property management. Those are all considered risks. So if you just understand if you look at the benefits versus the risks here, you're going to know that C, appreciation, is the correct answer. Okay, so now we're at our final question. Question number 10. When all members have unlimited liability for debts and obligations of the group, the organization is A, limited partnership. B, corporation. C, general partnership. D, syndication. The answer is C, general partnership. With this question, you're going to need to understand the different types of corporate structures. And so I'm going to walk you through. A general partnership is basically 2 or more people who have unlimited personal liability for the debts and obligations of the partnership. Now, in a limited partnership, only one partner has unlimited liability. And in a corporation, stockholders have liability that is limited to their capital investment. Perfect. Now that we're done with this section, let's move on to the next. All right, number one. What is the difference between void and voidable contracts? Oh, I like this part. It says choose the best answer. A. They are one in the same. The two terms can be used interchangeably. B. Voidable contracts are only used on residential property, while void contracts can be used in any real estate related transaction. C. Void contracts are not contracts, while voidable contracts have the necessary elements to be enforceable, but can be rejected by one party. D. Voidable contracts are not contracts, while void contracts have the necessary elements to be enforceable, but can be rejected by one party. Remember, choose the best answer. The best answer is answer C. Void contracts are not contracts because they lack an essential element of a contract and thus are unenforceable. Voidable contracts have the necessary elements to be enforceable, so they appear to be valid, but can be rejected by one party if the contract is discovered to have any number of defects. Question number 2. Which of the following legal concepts requires real estate listings to be in writing? A. Fraud Enforcement and Recovery Act. B. Fair Housing Act. C. Statute of Transgression. D. Statute of Frauds. The answer is D. The statute of frauds requires certain types of contracts to be executed in writing. And the statute covers contracts for the sale of land, agreements involving goods worth over $500, and contracts lasting 1 year or more. Question number 3. What is a radioactive gas dispersed from natural decay of mineral in earth? Odorless, colorless, and tasteless. A. Asbestos. B. Radon. C. Mold. D. Argon. Well, seeing as asbestos is a man-made thing and mold just grows, I'm not actually sure what argon is, but the answer is B. Radon. It's a radioactive gas dispersed from the natural decay of mineral in the earth. It rises out of the ground and enters homes through openings in basements where usually found. Question number 4. A contract agreed to and signed under duress is what? A. Void. B. Valid. C. Voidable. D. Executed. The answer is C. The contract was established under duress, fraud, deception, or coercion, making it voidable. A voidable contract is a legal agreement between two parties that may be unenforceable for any number of reasons. Voidable contracts have the necessary elements to be enforceable, so they appear to be valid, but they can be rejected by one party if the contract is discovered to have any number of defects. All right, before we hit question number 5, the halfway mark of our 10 questions, go ahead and subscribe to the channel if you like the content that I've been making. Thank you for the support. Let's get back to the questions. Okay, question number 5. Which of the following real estate contract clauses is typically seen in blanket mortgages and allows for the freeing of all or part of a property from a claim through a proportional or full amount of the mortgage being paid off? A. The release clause. B. The defeasance clause. C. The alienation clause. D. The prepayment penalty clause. The answer, A. A release clause is a contract provision, typically in a blanket mortgage, that allows for the freeing of all or part of a property from a claim through a proportional or full amount of the mortgage being paid off. Question number 6. A seller named Joan gave a buyer named Bob an option for 30 days to purchase her property for a consideration of $750. There is no anti-assignment clause in the contract. Which of the following statements is not true? A. Joan is the optionor. B. Bob is the optionee. C. Bob can assign the option to a third party. D. Joan can force Bob to purchase the property. So first of all, Joan, you're selling your property for $750. Can I get in on that? Because there are no homes for 700. There are no properties that are available for sale for $750 in my area. Okay, so the answer is D, and we're gonna walk through each one, right? So Joan is the optioner, Bob is the optionee, right? So Bob has the option to purchase the property, and because there's no anti-assignment clause, Bob can go ahead and assign the option if he wants to. So remember, a seller cannot force a buyer to buy the property with an option to purchase. It's worth noting that the seller can, in a lease to purchase, but in this question, it specifies it's an option contract, right? So Bob has the option. Bob, you should definitely buy that property for $750. Okay, question number 7. When calculating the amount of real estate taxes owed, calculations are based on what type of value? A, assessed value. B, implied value. C, market value. D, appraised value. And so for any of you that have paid property taxes, you're going to know the answer is the assessed value. The answer is A, is a property's determined valuation to calculate the appropriate tax rates. All right, question number 8. What is a one-of-a-kind contract that is solely between the seller and the buyer? In this arrangement, the seller gives the buyer the option to purchase property at a given price for a set period. A, an executed contract. B, an express contract. C, an implied contract. D, an option contract. Answer D, a real estate option contract. We just went over this with Joan and Bob, right? Joan gave Bob that option to purchase her property for $750. So yeah, a real estate option contract is a one-of-a-kind contract that is solely between the seller and the buyer. In this type of contract, the seller gives the buyer the option to purchase the property at a given price for a set period. Question number 9. Under a lease for a commercial property, a tenant agrees to pay $3,000 per month plus 4% of the gross monthly sales. This type of lease is called A, single net lease. B, double net lease. C, triple net lease. D, percentage lease. The answer is D. A percentage lease is a lease in which all or part of the rental is a specified percentage of gross income from the total sales made upon the property. Okay, friends, we're here at the end. Question number 10. I've had a great time studying with you. I'm hoping this video really helps you pass your real estate exam. All right, question number 10. Under what situation, if any, may a lender consider age when making a lending decision? A, never. B, if the applicant's income might drop due to retirement. C, if the applicant's source of income is through any form of public assistance. D, discount or refuse to consider income because it comes from part-time employment, Social Security, pensions, or annuities. The answer is B. A creditor can consider age if it's used to determine the meaning of other factors important to credit worthiness. For example, a creditor could use your age to determine if your income might drop because you're about to retire. A creditor cannot consider age in any of the other situations listed. So from a lending perspective, right, they just want to make sure that your income and your ability to repay the loan is still sufficient. So in this specific example, it does make sense if someone is going to retire and their income drops, they would take that into consideration. So I've had such a good time going over these questions with you that I want to give you one bonus question. Question number 11. Mrs. Jackson signs an open listing on her home with 3 different brokers. In this case, A, each broker has an opportunity to earn the entire commission. B, the owner must pay a full commission to all 3 brokers if it sells. C, the owner must pay the first broker to take the listing when it sells. D, the brokers will split the commission 3 ways regardless of who sells it. Mrs. Jackson, playing the field. All right. The answer is A. An open listing is just open, truly open. Each broker has the opportunity to earn the entire commission if they can come up with a buyer. I like this question a lot because it's kind of relevant to what's going on in real estate with the NAR commission settlements. This one's kind of funny because it just proves that all real estate commissions have always been negotiable. All right, let's go. Next section. Question number 1. Which of the following properties requires the use of a lead-based paint disclosure? A. Single family residence, SFR, built in 1975. B. Senior citizen housing, built in 1986. C. Homes for the disabled, built after the passing of the Americans with Disability Act, ADA. D. Multifamily homes, built after 1990. So the main thing you need to know about the lead-based paint disclosure is that it applies to residential properties built prior to 1978. Based on that information, so the answer A, single-family residences built in 1975, is the only one that applies for the lead-based paint disclosure. Question number 2. A negative declaration issued for an environmental impact report. A. Indicates no negative influence of the development on the surrounding environment. B. Shows whether the developer had a previous record of poorly designed subdivisions. C. Is a positive statement made by the government in favor of the developer. D. Is typically issued by a government authority after initial review period. So let's kind of cover a environmental impact report real quick. EIR, these make no historical or future judgments about the developer. It is issued after the final environmental study is complete. And so a negative declaration in one of these reports basically indicates there's no negative effects of the proposed development to the environment. So based on that, the answer is A. Number 3, the Federal Fair Housing Act, FFHA, prohibits discrimination in the sale, rental, and advertisement of A. Residential units, B. Commercial properties, C. Industrial properties, D. Land used for the grazing of livestock. So if you just read FFHA, it says Fair Housing Act. You're going to know that it basically relates to housing, which is residential units. So based on that premise right there, the answer is A, residential units. Okay, number 4. The preamble of the Federal Fair Housing Law states its purpose is to eliminate discrimination in housing and to A, provide fair housing for everyone throughout the United States. B, establish Fannie Mae. C, provide low-cost housing for all. D, create equal employment opportunities for all protected classes. So if we read Federal Fair Housing Law, that's just going to assume it's trying to make housing fair for all, right? So the Federal Fair Housing Laws are broadly designed to facilitate fair access to housing for everyone. And the answer is A. Answer C actually is kind of a tricky one because it kind of feels like it might be the right one, but answer A is the most accurate. Question number 5. Which of the following requirements made by a landlord is unlawful? A. Requiring a 600 or better FICO score. B. Requiring cosigners for unmarried lessees. C. Requiring each adult occupant to sign a tenant rules agreement. D. Prohibiting the use of waterbeds in the property. Oh, this is kind of a tricky one, actually. So my initial gut, if we didn't know, because we're in California, would just be like, oh, maybe it's credit. Maybe you can't deny people based on their credit. But the answer is B. Landlords may not require unmarried tenants to have separate cosigners. Singling out single adults is unlawful. Requirements related to economic and financial questions are appropriate so long as they are applied to everyone equally. So basically you can't discriminate based off of marital status. B. Question number 6. Based on the principle of leverage, an investor will A. Use their own funds whenever possible. B. Use borrowed money only to the degree deemed safe and reasonable. C. Buy income property with a minimum down payment. D. Invest in rental properties with declining values. What is the principle of leverage? Leverage, when it comes to investing, means putting the least amount down and securing financing. So answer A, not going to work here. That's the complete opposite. Answer B and D don't really make a lot of sense as well here. So answer C is the right answer. Basically, the goal of leverage, right, is to put the least amount down to acquire an asset that has the most value. Question number 7. 1 year after his real estate license expired, Claude renewed the license. Which of the following is a true statement? A. Claude can operate under a restricted license during his suspension. B. Claude has to retake the license examination. C. Until the license was renewed, Claude was not allowed to participate in anything that required a license. D. Claude is no longer eligible for a license. Okay, so let's just go over this. If your license is expired, that means you don't have an active license. So you are not allowed to participate in anything that requires a license. The answer is C. Until the license was renewed, Claude was not allowed to participate in anything that required a license. Question number 8. If a lessee transfers all of their interest in a property, the transferee who receives the lessee's interest is classified as A. Assignee. B. Assignor. C. A vendee. D. A vendor. Vendee. Are we talking about Starbucks sizes here or what? What's going on? No, I'm just kidding. Let's kind of go through the definitions of A. An assignee is the individual to whom property or interests have been transferred. The assignor is the individual who assigns or transfers the rights or interests they hold in personal or real property. And so the other choices, vendor and vendee here, those are specific to a sale and like land sales. So they're not even applicable here. So it's got to be assignee or assignor. And we know that the assignee is the individual to whom property or interests have been transferred. Answer is A. Question number 9. When two brokers make a verbal agreement to split a commission, the agreement is A. Void. B. Voidable. C. Unenforceable. D. Enforceable. So you might be surprised at this one. The answer is D. Enforceable. Oral agreements between brokers to split commissions are valid and enforceable. Okay, question number 10. When the vendee under a land sales contract makes payments, which include an impound for taxes, A. The vendor needs to hold the monies in a trust account. B. The vendor can use the monies for other uses so long as they pay the taxes when due. C. The vendor can keep the monies anywhere so long as they don't convert the funds. D. The vendor cannot hold the impounds unless they are licensed with the Department of Real Estate. So what are impound for taxes exactly? That means it is a separate account to pay for property taxes. So when a vendee under a land sales contract makes payments, which include an impound for taxes, those monies need to be held in a trust account. Answer C, the vendor can keep the monies anywhere so long as they don't convert the funds, seems pretty reasonable, but the reality is the answer is A, they must be held in a trust account. Okay, so we've gone through the 10 questions. Thank you so much for watching the video. If you want a bonus question, please stick around. So I'm going to go through one more additional question. This one always got me. So yeah, let's dive right into it. Bonus question. Property is defined as A. Rights or interests which a person has in a thing owned. B. Real if it is a trade fixture. C. Personal if it is a fixture. D. A license to use something owned by another for a temporary period of time. Property is basically just the rights or interests which a person has in a thing owned. So property can be classified as real or personal. Answers B and C are just wrong. So the answer is A. Rights or interests which a person has in a thing owned. Perfect. Now that we're done with this section, let's move on to the next. Question number 1. In common law, a deed is any legal instrument in writing which passes, affirms, or confirms an interest, right, or property that is signed, attested, delivered, and in some jurisdictions, sealed. It is commonly associated with transferring title to property. Within deeds, covenants are A. Types of property. B. Forms of money or payment. C, agreements or promises. D, property listings or values. There is a lot of vocabulary in this, so there's a lot of words. Take your time on these questions. Make sure you understand the question thoroughly. The answer is C. Covenants are agreements or promises within deeds. So, for example, a warranty deed can include 6 forms of covenants. Those 6 are a series of legally binding promises and warranties to the grantee, agreeing to protect the grantee against any prior claims and demands of all persons in regards to the conveyed land. Question number 2. Utilizing the 28/36 rule, if Rebecca's gross income is $4,500 a month, she would need to spend less than blank in housing costs a month to qualify for most loans. A, $1,200. B, $1,260. C, $1,728. D, $13,500. The answer is B. According to the 28/36 rule, she would need to spend less than $1,260 in housing costs a month to qualify for most loans. Now, to calculate this, all you need is to multiply 0.28 to her monthly income. This is useful for agents to work with clients to determine what loans they can qualify. The 28/36 rule states a household should spend a maximum of 28% of its gross monthly income on total housing expenses and no more than 36% on the total debt service. Now, keep in mind, you are not a licensed loan officer, so this is just a ballpark estimate. When it comes to actually talking about these monthly numbers and monthly payments, let the licensed loan officers handle this conversation. Question number 3. How many miles does a township contain? I'm not even going to lie, I missed this one for sure. This one always hung me up. Sorry, all right, so back to question number 3. How many miles does a township contain? Question A, 6 miles. B, 9 miles. C, 36 square miles. D, 81 square miles. The answer is C. Each square, 6 miles by 6 miles, is called a township. Since each township is 6 miles by 6 miles, townships contain 36 square miles, each one forming a section. I hated these questions, and that's why I included this. So this one's just one you got to memorize. All right, question number 4. Which of the following statements is true about trusts and trustors? A, a trustor is the one who transfers a property upon the trustee. B, a trustee is the one who transfers a property upon the trustor. C, a trustor must be an individual, not an organization, per federal law. D, a trustor must be a financial institution, such as a bank, per federal law. The answer is A. Trusts can be created during an individual's lifetime, or they can be established following someone's death. A trust works as it follows. The first party, the trustor or settlor, transfers a property upon the second party for the benefit of the third party, the beneficiary. The trustee is required to manage the trust property in accordance with the trustor's wishes and in the beneficiary's best interest. A trustor can be an individual or organization. Question number 5, halfway mark. Even after an offer has been accepted and signed by all parties, the buyer and seller may still choose to sign mutual release papers rather than proceed to closing. Which of the following circumstances would not give either party a justifiable reason to insist on a mutual release? A, the buyer finds another property they prefer. B, a little defect is discovered that will take months to clear. C, a fire causes damage to the property that requires extensive repairs. D, the buyer is unable to obtain financing that meets the terms of the contract's financing contingency. The answer is A. All of the other options are justifiable reasons to insist on a mutual release, except the buyer finding another property they prefer. So just make sure with these questions that have a not, read it carefully and read the answers really carefully. Take your time on these ones because these are easy ones to miss just because you misunderstood the question. Question number 6. Appraiser Larry has a set of special purpose and public service buildings like schools, churches, and post offices, which he needs to appraise. Which approach to value would Larry, the appraiser, choose to complete the task? A, cost approach. B, estate approach. C, income approach or summation. D, market data approach or sales comparison approach. So the answer is A. For a special purpose and public service buildings like schools, churches, post offices, the cost approach is the best choice. And the reasoning is because these types of buildings usually don't have income. So the income approach doesn't really work. There's also not really a lot of comparable sales to do the sales comparison approach. So cost approach is the best answer. Question number 7. Which of the following best describes eminent domain? A, a term used to describe the right of the government to take over privately owned livestock. B, a term used to describe the right of the government to take over privately owned real estate. C, a term used to describe the right of the government to take over privately owned bank accounts. And D, a term used to describe the right of the government to take over people's children and sometimes pets. Okay, so the answer here is B. Eminent domain is a term that we probably all heard. It's used to describe the right of the government to take over privately owned real estate despite the owner's wishes. So this happens for land that's required for infrastructure like highways, major sewer, railroads, etc. Actually, the 5th and 14th Amendments of the U.S. Constitution permit the government to exercise its power of eminent domain. And so this question sometimes will be a little bit trickier. They'll use a term used to describe the right of the government to take over privately owned personal property. Or it might be a little bit trickier. Just make sure you pick the right answer. If the answers are written a little bit more tricky like that, just make sure you pick the best answer, which is to take over privately owned real estate. Question number 8. Acceleration is a term associated with which type of document? A, leases. B, deeds. C, mortgages. D, rental agreements. The answer is C. Acceleration is a term associated with mortgages. The acceleration clause is a contract provision that allows a lender to require a borrower to repay all of an outstanding loan if payments are not being made or there is a breach of contract. So usually, if a borrower isn't making any payments on the property, the acceleration clause will come into effect, which demands immediate payment for that said property. It's more of a legal clause that they add for protection to make sure borrowers aren't taking advantage of them. All right, question number 9. A broker's listing on a house expired. The next day, it was listed with another broker and offered in the MLS. A week later, a third licensee called the first broker and asked for the key to show the home. The broker should inform the caller that A, he is no longer the listing agent. B, the house is currently off the market. C, he will leave the key under the doormat. D, he will set up an appointment for showing the home. The answer is A. And yeah, it seems like a really dumb question, but just don't overthink it, all right? He's no longer the listing agent, and he must inform the caller of that info. Anything else would probably be deemed unethical and potentially illegal. All right, thank you for staying with me till the end. If you like this video, go ahead and hit the like button. Question number 10. In a single agency relationship, a real estate broker represents who? A, the buyer only. B, the seller only. C, the buyer or seller. D, the buyer or seller, but not both. The answer is D. Dual agency is one agent represents both the buyer and seller in a transaction. Single agency is a relationship with the buyer or the seller, but not both. Just make sure you read this one carefully. Take your time. This is an easy one as long as you understand what agency is, single agency and dual agency, but just make sure you get this one right, because you could quickly misread it or something like that. So make sure you maximize and score the points that are easy points on the test. Because I really want to see you do well, and I want to give you this one extra question here, we're going to go on to question number 11, bonus question. Compliance with zoning ordinances is monitored through the issuance of A, buffer zones, B, CCRs, C, covenants, D, zoning permits. So the answer is D. Compliance with zoning ordinances is monitored through the issuance of zoning permits. So that's where the property owner or developer can't just alter the use of a property without getting a zoning permit. And these permits aren't issued unless the proposed development conforms to the zoning ordinance. Zoning permits are usually required before building permits can even be issued. CCRs and covenants are typically terms associated with compliance, but just keep in mind, right? Zoning permits are how people monitor compliance with the zoning ordinances. And finally, we're on to the last section. Question number 1. Jan failed to renew her license prior to its expiration. In order to renew her license now, Jan must A. Submit a proper application within 2 years of her license expiration. B. Provide evidence of the completion of current required continuing education. C. Pay the appropriate late renewal fee. D. All of the above. Jan, you should have never let your license expire. That was your first mistake. No, I'm just kidding. It happens to us sometimes. The answer is D. All of the above. So Jan will need to submit her proper application within 2 years of her license expiration date. She will need to provide evidence of the completion of current required continuing education. And C, she's got to pay that late renewal fee to the California DRE, Department of Real Estate. Question number 2. The main purpose of the California Department of Real Estate, DRE, is A, to protect the public. B, to ensure the qualification of applicants and issuance of real estate licenses. C, the regulation of the sale or lease of subdivision interests. D, to advise the California Real Estate Commissioner on real estate matters that are important to the real estate industry and the public. The answer is A. The California Department of Real Estate's mission is to protect the public in real estate transactions and provide related services to the real estate industry. Now, make note of this question because it feels like there could be 3 correct answers on this one, right? Answer A, protect the public. Answer B, ensure the qualification of applicants and issuance of real estate licenses. That is something that the DRE actually does, right? And then also D, to advise the California Real Estate Commissioner on real estate matters that are important to the real estate industry and public. That feels like it could be right as well. So on questions like this, where it feels like there could be multiple correct answers, you need to pick the best answer. So if you read the question carefully, it says the main purpose, right? And so the main purpose of the DRE, the mission statement, is to protect the public. That is the number one thing. That is the highest and best answer. Okay, let's go to question number 3. Bill, the broker, received a very high offer on a piece of property from a buyer. Bill makes a low offer through a dummy purchaser or an accomplice who is not a buyer at all. Bill then sells the property to the buyer for the higher price, with the difference being profit. What's the violation? A, commingling. B, secret profit. C, false promise. D, dishonest dealing. The answer is B. Section 10176G of the Business and Professions Code covers secret profit cases where the broker, who already has a higher offer from another buyer, makes a low offer, usually through a dummy purchaser. The broker then sells the property to the interested buyer for the higher price, with the difference being the secret profit. So in this question, it's really important to just understand what each term means. So for example, right, commingling is when a broker commingles funds. They use funds from real estate with their personal, or they put, deposits into their personal. And so in this specific question, it's really important to understand what each answer means and the definition of each of those. Okay, moving on to question number 4. Katrina had her license suspended for making false promises to clients. She had a habit of telling clients what they wanted to hear and never being able to state the facts. Of course, she could never follow through with her statements, and several complaints were filed. Which guidelines constitute most suspensions? Answer A, sections 10176 and 10177 of the Business and Professions Code. Answer B, sections 101.76 and 101.77 of the regulations of the commissioner. Answer C, section 11350.6 of the Welfare and Institutions Code, section 17910 of the California Code. Answer A, sections 101.76 and 101.77 of the Business and Professions Code constitute the foundation for most license suspensions or revocations. Section 101.76b specifically covers false promises. So for this question, I think the biggest thing is just knowing what sections go with what codes or what kind of departments, right? So in this one, section 101.76 and section 101.77 go with the Business and Professions Code. All right, moving on to question number 5. The law judge has just issued a decision based upon the findings in a formal hearing of a real estate salesperson for various ethical violations. What could the California Real Estate Commissioner do at this point in the proceeding? A, reject the proposed decision. B, accept the proposed decision. C, reduce the proposed penalty and make an official decision. D, all of the above. The answer is D. Once the administrative law judge issues a proposed decision based upon the findings, the commissioner may reject or accept the proposed decision, or reduce the proposed penalty and make an official decision. The respondent may petition for reconsideration and has the right of appeal through the courts. Question number 6. Sam, a broker, thought the postage meter stamp was sufficient evidence of a U.S. Postal Service postmark. He was wrong and his broker's license expired. What happened next? A, Sam's broker's license expired, so he had to cease all of his license activities. However, his salesperson still possess active licenses and may continue with business while Sam is temporarily unlicensed. B, Sam must immediately stop his license activity and his salespersons all lose their licenses as well. All must retake the state license examination to reactivate their licenses. C, Sam must immediately stop his license activity. His salespersons are all placed immediately in non-working status, and his branch office licenses are canceled. He must take all necessary steps to reactivate his license, his salesperson's licenses, and the branch office licenses. D, Sam must stop his license activity until he reactivates his license. The only salespersons affected are those with conditional salesperson's licenses. They may not reactivate their status and must complete the required courses to obtain a 4-year salesperson's license. Wow, there's a lot to break down in this. The answer is C, and we'll kind of cover why. So let's take a step back before we go into this one. Just keep in mind, California salespeople, their license is hung at a broker. So in this specific example, we're talking about Sam, who is a broker. And so when a broker's license expires, all license activities of the broker must cease. So the broker's salespersons are immediately placed in a non-working status, and any branch office licenses are canceled. So the broker must get their own license reactivated and then reactivate the license of each salesperson in the broker's office by submitting a salesperson change application. Finally, the broker must reactivate any branch office licenses by submitting a branch office application. So in basic terms, any salesperson who has their license under Sam, the broker here, they're in non-working status because Sam is not active. So Sam's got to get his broker's license active again. If he has any office branch locations, those are canceled. He's got to reactivate those. And then he's got to also reactivate all his salesperson's licenses. A lot to break down in that last question. Take a second, take some notes on it, and then when you're ready, move on to the next question. Question number 7. Susan is thinking of putting her home up for sale, but doesn't want to use a real estate agent. What are her options? A, Susan must obtain her real estate license or use a licensed real estate agent to sell her property. She cannot be compensated for the sale of her property unless she is representing another person. B. Susan may sell her property herself without obtaining a real estate license. Although she will be compensated for the sale of her home, she is not representing another person. C. Susan will be negotiating the purchase price of her home and must be licensed to do so. D. Both A and C. The answer is B. Because Susan is selling her own home and not providing the service for another person, she is exempt from needing a license. Yeah, this one is pretty straightforward. It's Susan's house. Susan can sell her house if she knows how without a real estate agent. And if an agent wants to try to get some commission for bringing a buyer to Susan, they're going to have to negotiate. This is actually a huge misconception in real estate, is that you have to use a real estate agent. It's just simply not true. You could, if you own a house, you can sell it yourself if you know how, if you have a friend that's a real estate attorney, if you understand the process. But if you want maximum exposure, you probably want to hire a real estate agent. Question number 8. Miranda helps her friend Lupe purchase a home. She researches the neighborhood, assists her with a mortgage. She essentially acts as Lupe's real estate agent. There is only one issue. Miranda does not have a California license, and Lupe has paid Miranda for her help. Is this acceptable? A. Yes, it's acceptable. Miranda is a lender who makes federally insured or guaranteed loans. She has helped Lupe with her knowledge and experience, and Lupe has compensated her time. B. Miranda is simply helping her busy friend make good choices. She just wanted to put her knowledge of the real estate industry to work. Although she has never passed a licensing examination, she knows everything an agent does. C. It certainly is not acceptable. Miranda is accepting compensation for representing another person in a real estate transaction, and she does not hold a California real estate license. D. Miranda is in the process of studying for her license. She will be taking the examination before Lupe's real estate purchase closes. Miranda will be a licensed real estate agent at the close of escrow. So yes, it is acceptable. The answer is C. A person must be licensed if she undertakes or negotiates to undertake any activity that requires a license when that activity is for compensation and for another person. So C, certainly not acceptable. In terms of a real estate transaction, Miranda does not have a license, so she cannot accept compensation for representation of another party in a real estate transaction. Question number 9. The state fiscal year falls between the dates A. June 30th to July 1st. B. January 1st to December 31st. C. December 31st to January 1 midnight. D. July 1 to June 30th midnight. The answer is D. The fiscal year commences on the first day of July and ends with the 30th of June following. So keep in mind, calendar year, January 1st to December 31st. State fiscal year, just remember July 1st to June 30th. You'll be good. Question number 10. Hannah is a newly licensed California real estate salesperson. She has aspirations of one day being the California Real Estate Commissioner. High hopes, Hannah. We'd love to see that. How does she get there, and what does she do once she's there? A. Hannah must become an attorney as well as a licensed real estate agent. She would need to have the appointment of the governor of California. Her primary duty would be the qualification of applicants and issuance of real estate licenses. B. Hannah would have to be appointed by the California Real Estate Commission. Her primary duty as commissioner would be regulation of the sale of subdivision interest. C. Hannah would need to be elected the California Real Estate Commissioner in a statewide election. Her primary responsibility as commissioner would be to enforce the real estate law and subdivided lands law. D. Hannah would need the appointment of the governor of California. Her primary duty as commissioner would be to enforce the laws in a manner in which maximum protection for real estate consumers is achieved. The answer is D. California Real Estate Commissioner is appointed by the governor and serves as the chief executive of the Department of Real Estate with the responsibility to enforce real estate law and the subdivided lands law in a way to offer maximum protection for persons dealing with real estate licenses and for purchasers of subdivided real property. So if we look at this question from a high level and we think about what is the purpose and the mission of the California Department of Real Estate, the mission of the California DRE is to protect the public. And so what is the commissioner? The commissioner is the main executive of the DRE. The main responsibility of the California Real Estate Commissioner is to protect the public. So this question, three of the answers seem kind of correct, right? Answers B, C, and D. You need to pick the most correct answer here, and that is D. It's your lucky day. We got an extra question for you. So this is actually 11 questions. We got a bonus question for you here so you can maximize your studying. Bonus question number 11. Sam has successfully completed the Real Estate Principles course, the Real Estate Practices course, and an additional college level course, and passed the salesperson licensing examination. Which license is available to Sam? A, the 4-year salesperson license. B, an original salesperson license. C, a restricted salesperson license. And D, a conditional salesperson license. The answer is A. Applicants who provide proper verification that the application has completed all 3 required courses and has successfully completed the salesperson examination may apply for a 4-year salesperson license. Thank you so much for watching this video. I really hope that you pass your real estate exam on the first try. And go ahead and email me or comment below after you pass your real estate exam.